Hey, what's up, everybody? April 29th, Wednesday. Let's go over what happened. We had the Fed meeting today, and well, there was not much that the Fed, nothing major, no major changes, right? The Fed said they were gonna leave interest rates at 0 to 25 basis points for forever, basically, for as long as necessary. And they were going to continue to buy Treasury and agency securities and MBS. We know they're doing that, but recently they have tapered those purchases. I think they're down to 10 billion a day. They were doing something like 75 billion a day a couple of weeks ago. So that's basically what they said, but they did, I think their statement kind of had, I think it was very gloomy with respect to the impact, the virus impact on the economy. So, but the markets acted well. I mean, we came off our highs a little bit, but we had a strong day. I want to talk a little bit also about the EIA report, the Energy Information Administration's, the weekly petroleum status report. As you know, I do a full in-depth analysis of that report every Wednesday when it came out, and just confirms what I have been telling you now for the past 2 weeks. We are seeing some very nice improvement in the data, all right? We saw another build in crude inventories, up 9 million barrels, but that was the smallest build in 5 weeks. We saw a big draw in gasoline. Gasoline had the biggest draw in 6 weeks. It is now down, I believe, to a 4-week low, gasoline inventories. Distillate had a build. We had nice pickup in demand. Gasoline demand was up. As a matter of fact, the increase in gasoline demand was the largest in a year. All right, now it's coming off of a low level, I understand that, but this is the 3rd week of increased gasoline demand. And just anecdotally, I will tell you that, I mean, I'm seeing more cars around. People are kind of reporting the same thing when they're out on the roads driving. So we're going to see a continued pickup in gasoline demand. Distillate demand was up as well. Refiner inputs, the largest increase in 5 months. So that's the crude input to refineries. So refinery demand for crude is rising. What else? Exports were very strong. Domestic oil production down another 100,000 barrels per day, down to 12.1 million. That is already a 1 million barrel per day reduction since the peak in late February. Okay, we were running at 13.1 million barrels a day. We're down to 12.1 million barrels a day, and I suspect that's probably going to fall another million and a half barrels a day when all is said and done. So, like I said, exports of crude bounced back very strong. Exports of product bounced back very strong. You could kind of look at this as an indicator of external demand, probably Chinese demand. So that's pointing to some rebound, some strength in Asian economies, China's economy, whatever. So the numbers look good, and not surprisingly, we saw a rally in crude, also a little bit off its highs for the day. But don't forget too that starting in May, which is just a few days away, the OPEC production cuts will come into effect, and I think a lot of these trends that we're starting to see now, which I've been calling the green shoots, right? I mean, you could really start to see those accelerate. Something on the fiscal flows, I'm not going to give it away entirely. You know, I've been talking about this, and this is really the core of my analysis, my MMT analysis. I look at the fiscal flows, and as I have been telling you now for a number of weeks, very strong. Market bottomed in March. We have had a very nice rally. I think, what are we down? About 13 or 14% from the highs. But some new developments possibly in the fiscal situation. If you want to know what those are, and I highly recommend, because that is going to shape, you know, next month, the month out, the month after that, go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader, and I'll be happy to send out that email. I've been on top of this situation. As you know, I see these numbers every single day. All right? Everybody waits 30 days, a quarter, then they report it. That's how Wall Street provides you with the information, or that's how the business media provides you with the information. I have it every single day. All right, this is, as I've said so many times in the past, this is like inside information, but it's totally legal. This is public information. Nobody looks at it, and the few who may look at it or glance at it, they really don't understand what's going on in these numbers. But I mean, this is the core of my analysis. I have this information every single day. So that's why we are ahead. I mean, I told you the other day that the deficit, you haven't even heard any news on that, but you will. It's 1.3 trillion so far this year. That is the highest nominal deficit and very close to the highest as a percentage of GDP. So, and by the way, we had Tesla earnings yesterday. Tesla earnings today. Tesla had a profit in the first quarter despite the coronavirus situation. Stock is up another $100 in the aftermarket today. I have been advising buying Tesla on the pullback. As a matter of fact, even yesterday I sent out, when we had a pullback in Tesla stock, I sent out an update to my subscribers to buy that stock. It is now already $100 higher from where it was yesterday. Maybe more than $100 higher from where it was yesterday. So tomorrow, ECB meeting, could be bearish for the euro. However, the dollar has been seeing some selling. You know what's interesting? The peak in the dollar index, if you follow the dollar index and if you use that as a proxy for the dollar, in sort of a broad sense, that peaked exactly on the day when the Fed expanded its swap lines to a multitude of central banks. I mean, I've tracked this. As soon as the Fed opened up those swap lines to a broader number of central banks, the dollar peaked out. So the Fed is there providing whatever dollars are necessary in this so-called dollar shortage situation, which probably puts a cap on the dollar, and we will see some, over time, a trend down, as I've been saying for a long time. It's taken a while, but actually the dollar's appreciation, despite this kind of unprecedented shortage of dollars that we've been hearing about, has been very, very modest. You're talking about a 12.5% appreciation in the dollar, whereas in the past we have seen much bigger rallies in the dollar, which eventually faded. I mean, the dollar has been in a long-term downtrend now for basically over 40 years. So that's the update for today. Tomorrow, the ECB meeting. And if you want to get that, not the report, but if you want to get my comments on the fiscal situation, go to my website, pitbulleconomics.com. I have the link right here in the description below. See everybody tomorrow. Bye-bye.